Lesson 6, Component 3, Aim C. This is the third lesson on cash flow, and if you look at the ticks, you're on number 4, topic number 4, which is improvements to cash flow. Aim C is about completing cash flow forecasts and investigating the positive and negative cash flow on a business. But this time we're going to actually start to build the skills and investigate more complex cash flow forecasts. The formula and the calculations stay the same. We're just going to deal with maybe more months and more lines of expenses and more lines of income. So if we look at the stepping stones, we've still got knowledge in terms of calculating cash flow accurately. We've still got evaluate a cash flow statement, but what those two are going to be different. And the final step is being able to recommend actions for a company with cash flow. These are all similar steps that you've had in the last two lessons, but this time we're going to use more realistic business cash flows. The words we need to look at are surplus, that's in excess; deficit, which is when a company is in loss, it doesn't have the money; the net cash flow, which is the difference between inflows and outflows; predict, making sure that we know what a cash flow can do; and creditors, making sure that we've got that the right way round. The jobs at the bottom are all finance related. We've got Treasury, IT Director, Income Tax Specialist and Project Accountant. So here it is, Task 1, Fergus the Florist. Fergus runs a floristry business. On 1st of July, he decides to carry out a cash flow forecast for the month ahead. He does some calculations and notes the following figures. Cash inflows, £2,400. Cash outflows, £2,100. Opening bank balance, £1,200. He then does the following calculations. So here you can see a cash flow being worked out without the formal spreadsheet. So the formulas come into play here. Net cash flow, now there's the formula on the right hand side with the yellow heading. It's total inflows minus total outflows. So over here for Fergus, we've got £2,400, that's right at the top, minus £2,100. It gives you £300 as an answer. Closing balance in the bank is 1,200. Now if you look onto the third bullet point, that's the opening bank balance plus 1,500. And that gives him the closing balance. Study his calculations and work out what would happen if the outflow figure in purple was 2,600. So I've colour coded it the same above, and all of the other figures remain the same. You'll need to use the formula in the NIFLA slide above you to help you. Off we go, then let's work this out. So we've got the net cash flow, which is 2,400, we're not changing that figure, minus cash outflows. That is, it was 2,100 and now it's 2,600. So I suggest we write down 2,400 minus 2,600, and that gives you a positive or negative figure. Yep, you've guessed it, that gives them a negative figure. It's minus £200. Now the formula for closing balance in the bank, you've got the numbers there for Fergus at the moment, 1,200. Now let's remind ourselves where that came from. Go to the third bullet point and you'll see it as the opening balance. Plus £300, well that was the first calculation, right above you, that's the net cash flow. Now that's a different answer, so that's a minus. And then you've got the answer. So 1,200 minus £200 gives you, and I think you can work the rest out. So with this new figures that Fergus has got, is he now doing better or worse with the cash flow for the month ahead? Just add that statement at the end. Task 2, Pretty Polly. Polly wants to open a clothing shop selling the latest fashions and accessories. She has forecasted her cash flow for the business, making the following assumptions. Every month she increases her spending on stock by £200. The shop has 3 members of staff, including her, who get paid £300 a month. In this case, let's assume heating and lighting are fixed. For the first 3 months only, she spends £150 on furnishings and fittings for the shop. That's kind of like a start-up cost. And the last point, from June, she hires 2 additional employees part-time who get paid £100 per month each. Your job is to complete the cash flow forecast, and to help you out, you need to fill in where the blue pound signs are. Now, don't get fazed by this a more complex cash flow forecast. This is simpler than you think. So let's look at the revenue and inflows. Let's go across on the cash sales: 2,000, 2,500, 2,900, a blank 4,000 and 4,500. Underneath, you've got payments received from debtors. You've got one blank on April. Let's just check over on the bullet points on the Pretty Polly case study. Have you got any comment about sales increasing? Let's have a look through all of them. Spending on stock, no. 3 members of staff, no. Heating and lighting, no. Furnishing and fitting, no. And additional part-time, no. So we can work this out. Looking at February, 2,000 plus 0, total revenue 2,000. 2,500 cash sales plus 350 on payment received from debtors. Add it together, fill in the blank. 2,900 plus blank equals 3,400. Moving on to May, something plus 700 gives you 4,150. June, £4,000 in cash sales plus 1,000 payment received from debtors gives you. So the total revenues going from February to July are not that hard to work out, hopefully. We're now looking at the expenses and outflows. So stock in February starts at £800. Have you got any comment in the case study? First bullet point, she increases her spending on stock by £200. So she starts her spending in February at £800, so you've got to increase that by 200 for March. 800 plus 200 gives you, I'm going to have to say it, 1,000. Then going across to April, you're on 1,000, you're increasing stock by 200, 1,200. I'm not going to do the rest, I'm sure you can add that up. Next line is wages. Is there anything on the case study? Well, we've done the first bullet point, stock. Let's look at the second one. 3 members of staff, including her, who get paid £300 a month. So here we need to look at 3 members of staff times £300 would be the February one. The second bullet point in the exam question might be a little ambiguous, a little unclear whether that's £300 in total or each. So if you're unsure, then you can do things like this. You can look at the column for February, you add up all the expenses: stock, rent, heating and lighting, council tax, furnishings and fittings, which is the fourth bullet point, £150, and that'll give you a total of 2,300, which means you're £900 short of the total expenses for February, giving you the answer for how much wages are in February. So that's your double check. Wages then. We've got 3 full-time members of staff, so £900 going from February all the way across to July. But hold on a sec, that very last bullet point, from June, so June and July, she hires 2 additional employees part-time who get paid £100 per month each. So here, you need to add on 2 lots of part-time wages, 2 lots of £100 to June and July, to your existing £900 for the full-time staff. Well, let's pause a second. Let's look at the way the second bullet point and the last bullet point are written. The second bullet point is purposely ambiguous, so it's actually asking you to double check what it is, whereas the last bullet point is saying how much they are earning each. So they are being a bit mean. Well, the only bullet point you haven't dealt with is the first 3 months she spends £150 on furnishings and fittings for the shop. So you've got a whole line of furnishing and fittings. It's only for 3 months, so as it says on the tin, put £150 in for the first 3 months, February, March, April. So therefore she spends nothing on furnishing and finishing, get the words out, furnishings and fittings for the shop for the last 3 months. So how can you represent nothing on a cash flow statement numerically? Well, hey, we're now right at the bottom on the actual cash flow part. You've worked out the total revenues for the 6 months. You've filled in the missing figures on total expenses going across the 6 months. Now you need to use the net cash flow formula, which, to be super nice, is actually written there: total revenue minus total expenses, also known as total inflows minus total outflows. So those rows have actually been written in bold as well for you. So for each month you do that subtraction and write the number going across that row. Now the very last row, closing balance. For February, it's actually all done for you. The net cash flow figure is there, minus £1,200. Your opening balance is 0, so your closing balance is minus £1,200. Now if you remember, whatever you close on the very last day of February with, you open your business on the first day of March with the same amount of money. So you're effectively carrying across the same number. Your opening balance for March is minus £1,200. Now as we're on the final row, you should have worked out the net cash flow, so you've got that figure already. The bit you need to remember is the calculation for closing balance. Now if you nip back to the last slide, to the NIFLA slide, it's got the formula for you. To be nice, which might be a rare occasion, I'm going to tell you the formula. It's opening balance plus net cash flow. So your figure with the blue pound sign plus minus £1,200. Now obviously you can't do a plus minus, so you need to remember your maths. It ends up just being a subtraction. Net cash flow, take away 1,200, gives you the closing balance. Whatever you close on the very last day of March with, you open on the very 1st of April with. And it's the same process going all the way across. So you've got your net cash flow figures you've done, and you're just doing that closing balance calculation and carrying it across. And you're using your closing balance calculation of opening plus net cash flow. Well, let's start putting these cash flow forecasts into a purpose. So we're going to look at the what ifs. What will happen if a business's net cash flow remains negative for some time? Well, if a business is doing nothing about having a negative cash flow for some time and they're completely unaware of it, that would highly likely suggest some incompetence in their financial management, and ultimately they're not even using any forecasting tools. For this reason, businesses must use cash flow forecasting to predict the cash balance at regular intervals so that they can take action in case a problem, that they can actually foresee a problem. So task 3, what kind of problems might a business encounter? What could make a business have a negative cash flow? If you're stuck, go back and look at the Pretty Polly. What was causing them to have negative money? Was it the amount of sales compared to the amount of income? The amount of sales compared to the amount of expenses? Well, we can work that one out. The answer would be yes, but we will need to be more specific. So we've got 2 types of income with the Polly. We've got the sales, and we've also got income coming from debtors. Now, if that was coming across every month, that's fine, but if the income from debtors is only once every other month. We've also got on Pretty Polly the furniture and fittings cost for the first 3 months, so that could be a startup cost. So there's all these things we can think about that could cause the problem for a business. So we've got to think about timing of it as well. So write a little summary in the task 3 box of all these problems and any more you can think of. Sticking with the grap horn then, we're still on the what ifs. We're now looking at what could happen if the large payment is overdue from a customer. So let's see if you've got any of these problems from the last slide. First point, the business could go overdrawn. If a large payment was overdue and they were made to pay it, in order to pay it, they could go into negative money. That's what overdrawn means. Next, they could actually get charged for being overdrawn. Then they might not have enough money in the bank to pay the bills. This is kind of what's going on at the moment, which is why there's lots of these schemes going on during the pandemic. As you can see, things are spiralling out of control. If the large payment is overdue and it could cause a business to go overdrawn, which they'll get charged for, and then they don't have enough money to actually pay the bills, have they actually got enough money to pay wages? And as if it couldn't get any worse, with all these money issues, they're going to delay ordering more stock. So if they delay ordering more stock, that's going to impact on their sales because they won't have anything to sell. So task 4, name 2 actions a business could take to avoid these problems. So what could they do to avoid getting charged for an unauthorised overdraft or getting charged for any overdraft? What could they do to avoid not paying wages, because that's not a good situation to be in with their workforce? And what could they do in terms of ordering more stock, because they need more stock to make more sales and they've got this bill coming in for payment. Possibly the word timing is coming in here, but that's only one suggestion. There is another answer to do with the overdraft. Fill in the 2 suggestions, please. The benefits of using cash flow and the risks of not using them. Task 5, find the foe, find the wrong one. There's a wrong one on both sides for benefits and risks. Let's look at benefits first. Statement A, the timing of expected inflows is planned and reminders can be sent when overdue. Statement B, the timing of outflows is known and can be renegotiated if there is a temporary problem. Statement C, revenues may be received late or not at all. And Statement D, owners can see any potential long-term problems and acts to increase the revenues or reduce the costs. One of those 4 statements is not a benefit. Highlight or underline the one you think is not a benefit, it's actually a risk. Now let's look at risks. Statement A on the right, if there is a likely short-term deficit, that's the going into minus money, going into overdraft. If there is a likely short-term deficit, action can be taken in advance. Statement B, payments are delayed and suppliers become alarmed and refuse to trade with them. Statement C, the business may have to pay high interest charges on unauthorised overdrafts. If you're wondering what that means, an overdraft is an agreement that's made with a bank that where your money goes in for everyday spending your current account. You're allowed to go into minus money, but an overdraft is a temporary arrangement. Unauthorised is you're going into minus money without the bank's permission. Statement D, the business cannot afford to pay its bills and eventually will have to cease trading. Your task in these 4 statements on the right is to identify 3 risks, 3 things that could go wrong for a company, and one of them is the foe, one of them is the wrong, one of them is actually a benefit. And all you need to do is highlight or underline it. Here's the answers to the swooping evil, that's the name of the bird, for task 5. On the benefits, ta-da, it's Statement C, if there is a likely short-term deficit, action can be taken in advance. A short-term deficit, a short-term lack of money. And the wrong one on the risks side, on the right-hand side, was Statement A. Revenues may be received late or not at all is one of the benefits. The consequences of poor cash flow. Not enough cash means the business will not be able to meet its day-to-day expenses and ultimately may go bankrupt. Staff may not get paid on time, which could cause resentment. Creditors may not get paid on time and lose patience. They're the ones that give the business the loan. So they are a liability, they are not an asset. The business could miss out on early payment discounts. The business may have to borrow money, which can be expensive. And the last point, too much of a surplus can also be an issue. Money could be better used, invested into the business for growth. Now that last one is talking about retained profit. If you're just keeping the cash, the net profit, if you decide to keep it in the bank, you're just keeping cash there. And if you have an excess of cash, I know that sounds weird, but if you think about it, if there's just cash sitting in the bank account, what is it doing for the business? So that's what we're talking about in terms of current assets. Do you want to just leave it as a current asset, or do you want to turn it into a fixed asset and look at growing the business, getting new machinery, new products? Now let's examine the factors which cause cash flow problems in a bit more detail. We're going to look first at low profits. Why does low profit cause a problem to cash flow? Profit can be a source of cash, and if a business does not make profit, it will eventually run out of cash, the main reason for a business. But let's also look at the solutions to these cash flow problems. A solution to the cash flow problem of low profits could be that we increase the use of promotions and advertising. That's part of your aim A work. You could lower the prices to generate sales and therefore cash. So that's using your profit margin, which is part of your aim B work. Oh my word, it's almost like it's a plan. The next factor causing cash flow issues, high levels of stock. I hope you're finding these factors quite weird, because you might think that they are actually a good thing, but let's explore that a bit further. Why does having high levels of stock cause a problem? If the cash is used buying stock and is therefore not available for other uses, so it's bought stock but you can't do anything else, the stock might become obsolete and therefore might not be able to be sold. Obsolete is another word for outdated. So here are the solutions to the high levels of stock. You could, one, buy lower volumes of stock and have a just in time, so you need new pencils for your stationery shop next week, so you just buy pencils, you don't worry about the rulers and the scissors. And you can delay payments to suppliers. Now that doesn't mean you're sneaky and you don't pay stuff back. You make arrangements so that you can time the payments of them. Things like use the 28-day payment period that's often allowed. Seasonal demand is the next problem to cash flow. Now that might be a bit odd. Seasonal demand is everybody wants their swimming costumes in the summer. So that's a season that makes a high demand on that stock. How on earth could that cause problems? Well, this is about timing really, because if, say, we look at a retailer of clothes and there's a huge demand for swimsuits in the summer, then that means that production of the swimsuit still has to be in advance. So they're going to have all the money tied up into the stock and the manufacture of it, but they don't get any revenue until the summer later in the year. And the other problem is that cash doesn't come into the business consistently throughout the year. They don't just want sales in the summer, they want an average sales across every month. So what can you do? What are the solutions? Well, you could delay payment to suppliers. Again, that's using things like the 28-day payments after they've delivered. Oh no, that's some of A and B stuff again. And you could also create products that generate revenue at different times of the year. So don't just be the clothes retailer that sells swimsuits. Expand your range and be a clothes seller that sells skiing and Christmas jumpers, things like that. So you've got more seasonal demand, so you can then flatten out that curve of high sales and you can encourage it to be more regular for the business. The last problem to look at then is giving customers generous credit terms. That means things like buy the sofa now, ready for Christmas, and pay nothing for another 4 months. That's the kind of credit terms we're talking about. So why and how does this cause cash flow a problem? Well, the delay between the sales and the cash coming into the business is a problem. Remember, you've sold the sofa or whatever the item is, and you don't actually see any revenue in 4 months later. And you've got a greater chance that customers will not ultimately pay, because some customers might have their financial difficulties, so you end up not getting the revenue in the cash from the sale of the sofa, as the thing that we're using as an example. How could you solve the problem? Well, you can insist on immediate payments. You don't offer any generous credit terms, or you can reduce the period of credit terms, reduce it to 30 days rather than offering 60 days or 4 months. Task 6. Nundu and Kurt. Nundu's the creature. Kurt is about to start up his own business. He has been advised to produce a cash flow forecast. One purpose of doing this is to enable him to forecast his net cash flow for each month. Please note, no numbers in this one. Give 2 other purposes of producing a cash flow forecast. Type your answers in the boxes provided, or you're going to write them down as Task 6, Nundu and Kurt in your books. Second part. One purpose of creating a cash flow forecast is to enable Kurt to forecast his net cash flow for each month. Statement like above. Part B. Explain why being able to forecast net cash flow would be helpful for the survival of Kurt's new business. Now, as we've come so far to all the finance of Aim B and where we are on Aim C, what you need to do now is see how well you can do by going back over the last few slides, or in the last few minutes, because you're looking at purposes of the cash flow and how net cash flow can help. Now, right at the beginning of the lesson, the very first task where you finished off the cash flow statement, you saw just how horrendously in deficit the first business was. You did another calculation for Fergus's Florist, where you changed a figure and you then put them into deficit. So those ones are going to help you with part A. Explain why net cash flow would be helpful. Well, then the best thing I can suggest for that one is that you look at the Pretty Polly and examine the full cash flow statement and look at what's going on with that row and use that to actually help you come up with a suggestion for part B. Look at what you have completed for lesson 6, cash flow. Fergus the Florist, task 1, Pretty Polly, task 2, Graphorn's business cash flow problems, task 3, Graphorn's business cash flow solutions, task 4, Swoop and Evil's find the foe, and task 6, Nundo and Kurt. I'm sure you won't get many of those statements about other lessons. Well done though, that's a fair bit of work that you've done on cash flow.